And I think you have to kind of take a step back and see what the biggest players in the world are doing. And the biggest players are the central banks who are massively de-dollarizing and buying commodities. And I think that's kind of the thrust that fits hand in glove with Zoltan Pozsar said. We are heading into a new era based on commodities and transparency, not opaque debt instruments and promises that seem to fall short. And I just think that this is something that will be a very, very...
You're watching Silver News Daily. Like this video and subscribe to the channel for the best news that you don't want to miss. Now let's get straight to it.
Francis Hunt, a notable market analyst, recently shared insights on the future of the silver market, highlighting the potential for the price of silver to reach an unprecedented $100 per ounce by April 2024. Hunt's analysis draws attention to the increasing scarcity of physical silver and the significant market dynamics that suggest a bullish trend for the precious metal in the coming years. According to Hunt, the current price movements and market conditions signal the early stages of a larger bull run in precious metals, with gold leading the charge. He emphasizes the importance of recognizing gold's dominance in the early phases of such market cycles, as it typically precedes more significant movements in silver prices. Hunt points out that silver's performance, while currently lagging behind gold's, is poised for a remarkable turnaround, particularly as market conditions evolve to favor precious metals more broadly. He suggests that investors who are astute enough to navigate these trends wisely could see substantial profits, potentially even reaching millionaire status through strategic investments in silver. The rationale behind Hunt's prediction lies in the intrinsic value of silver, not only as a store of wealth, but as a fundamental asset that represents wealth itself. He argues that as global economies face increasing instability, and as the reliability of fiat currencies comes into question, the world will gravitate back towards silver as the original form of currency, highlighting its enduring value and utility. Hunt's insights are backed by a detailed analysis of supply and demand dynamics in the silver market, including the role of industrial demand, particularly from sectors like renewable energy and electronics, which are driving up silver consumption. He also touches on the impact of monetary policy adjustments, such as interest rate cuts and inflationary pressures, on silver prices. Moreover, Hunt discusses the potential for a demand-destroying event, a significant economic or geopolitical shift that could temporarily impact demand for silver, but ultimately serve as a catalyst for its price to skyrocket.
I would like
He advises
everyone
investors to remain
bear,
vigilant
which
and prepared
is
for such
related
scenarios,
to the question you've
as they
just
could
asked.
present unprecedented
What's actually
opportunities
happening
for those positioned
is
to
the
capitalize on
cycles
them.
are shortening. In fact, I'm going to get the futures market on gold. I've got over here, Elijah, the bit of the gold futures. It gives us more history back to the 80s. And I've kind of highlighted in the pink the bull market runs and how lengthy the in-betweener pullback periods are. Those are the ice cold in blue periods. And what you'll notice is that the pullback periods are getting shorter. And this typically tends to come as you're getting closer and closer to a possible parabola blow-off event. In other words, the time needed to revitalize and go again is actually shortening and shortening. And this is part and parcel to go with the parabola of increase of issuance of debt. And as a result, you're leaning into an ever more needed bull market in metals. And because till now it's largely been contained, we haven't yet had that absolute blow-off event. As I say, 3,000, the 2,900s is just the beginning, and we actually have technical targets well beyond that, taking us to 7.5 potential. And that will come, much like Ernest Hemingway said about his bankruptcy, slowly at first. People will barely notice it, just like people are barely noticing we're actually in quite a clear bull market now, but then suddenly very violently. And that'll be even more so the case for silver. So this is something in terms of answering your question. Recognize the pullbacks are getting much shorter. The blue legs, the blue spells are actually getting a lot shorter. And so the notion of a demand-destroying event giving us an unbelievably deep pullback is not something I buy into. Even if they came out and said private ownership of gold is illegal, there'll be a black market somewhere, or the institutions will still trade a gold price, and I would anticipate that price would still remain strong. I can't think of a news event, and that was 2008 and 9. That was a depression. That was shutting the whole world down. So what's it going to take to do much more than something like that, and then to continue on up? I don't really think it's going to be that significant. And I would see it all as a major buying opportunity, both for gold, but potentially even more so for silver, because then after that, silver may fall more and might recover faster. So providing you're not an overweighted holder on silver, you'll have plenty of ammo and you can rotate some of your gold into the silver for the higher beta move.
Building on the foundation laid in the initial discussion, Francis Hunt's analysis extends into the intricate dynamics of the silver market, focusing particularly on the industrial demand that underpins silver's value. The consumption of silver in various sectors, especially those pivotal to the green economy, such as solar panels, electric vehicles, and other renewable energy technologies, showcases the metal's indispensable role in the modern industrial landscape. This burgeoning demand contrasts sharply with the finite nature of silver supplies, laying the groundwork for a significant price appreciation. Hunt emphasizes the crucial understanding that while silver serves as a monetary asset akin to gold, its extensive industrial applications set it apart, driving its demand independently of financial market fluctuations. This dual nature of silver, as both an investment asset and an industrial commodity, is a key factor in its potential to outperform gold and other precious metals in the long run. The growth in renewable energy adoption and technological advancements further solidifies silver's position as a critical component of future economies, thereby enhancing its investment appeal. The concept of a supply deficit in the silver market is another critical point Hunt elaborates on. The current production levels of silver, affected by factors such as mining challenges, environmental regulations, and geopolitical tensions, struggle to keep pace with the explosive growth in demand. This imbalance between supply and demand is a fundamental driver of silver's price trajectory, potentially pushing it towards the $100 per ounce milestone. Hunt also touches on the role of monetary policy and its impact on precious metals. The low interest rate environment and expansive monetary policies adopted by central banks globally have historically been bullish for precious metals. Silver, with its smaller market size compared to gold, is particularly sensitive to shifts in investor sentiment and monetary policy changes, making it more volatile but also offering higher potential returns. In preparing for the forecasted silver bull market, Hunt advises investors to monitor key indicators and market conditions that could signal the acceleration of silver's price ascent. These include trends in the renewable energy sector, changes in global monetary policy, and developments in silver mining and production. By staying informed and agile, investors can position themselves to benefit from the anticipated surge in silver prices.
Happy with what we're seeing, as you can imagine. We've actually just had a structure that's performed to target. When we go up to the charts, I'll show you that. And that's why after running the 2,210, I think it made all the twos. We then got a bit of a pullback. But already it's set up again and it's going again. In fact, we're seeing gold almost in nice setups on other crosses. So the dollar is also part of the equation. And we've been talking in our community about a gold pound and a gold euro. So remember, there's people and in fact on trading platforms we can trade gold against some of the other majors too. So dollar's been a tiny bit firming. And it's muddied the water on some of the structure technically for it after that 222 run, all the twos, 4 twos. But we're actually seeing it looking pretty perky on the others. So we expect it to make new highs, but we're expecting better performance on gold against the other currencies, the other majors. So it's awesome. Yes, it's absolutely awesome. And I think it's starting to count. I suppose if you're asking for my state of the nation in terms of the precious metals, this is still very much the early stage, and this is the gold dominating stage. And the biggest question for those that are over positioning too soon, too aggressively in silver is when silver. And if that's a question you're interested in me putting my take on, I'll happily do that, although we've discussed it before. But in the beginning, this is how it goes. Really big cycles need the God market, gold, to be the predominant mover in the beginning, and everything else tends to lag, and it's the most consistent. We've seen this repeat in much smaller cycles in Bitcoin versus the alt market run as well for those that are engaged in crypto. But essentially, you need the big boss to move, and the big money moves first. It's the best informed money. It's often the central bankers themselves that know the state of the nation, and also very high net worth individuals. If I'm looking to park up 10 million or 25 million as a high net worth individual, it's going to be gold, not silver, because I need a massive warehouse for the silver in lieu of price. So the density of value of gold plays a role, and it reduces the storage cost and other elements. So the God market is gold, and we're still in that phase. I think too many people, if I'm going to be a doctor of diagnosis in terms of my feedback on YouTube channels and other things, over position for the next stage of the cycle. And it's kind of like being a heptathlete where you've got all these events you've got to do. You don't want to do the 100-meter sprint already carrying your high jump pole. You've got to leave that. It's not time for high jump. It's sprinting. You're going to get left behind and you're going to get absolutely rinsed by all the other sprinters. So the point of the matter is to play what's in front of you right now. Gold dominance is what's in front of us right now. And silver's day will come, but it will be a much narrower window and a far more violent one. And it's kind of the same again in crypto markets, which is sort of taken after the precious metal markets for those that have that exposure. So that's my State of the Nation speech for precious metals and how I'm seeing people.
Continuing the exploration into the nuanced dynamics of the silver market, Francis Hunt delves into the geopolitical factors and macroeconomic trends that could influence silver's trajectory toward the $100 mark. One key aspect underlined is the geopolitical tensions and their implications for the silver market. Countries that are major producers of silver, such as Mexico, Peru, and China, often face political and economic uncertainties that can disrupt mining operations and silver supply chains, contributing to the metal's scarcity and price volatility. Hunt also examines the burgeoning technological advancements and their voracious demand for silver. As technologies evolve, particularly in areas like 5G telecommunications, robotics, and artificial intelligence, the requirement for silver, given its unparalleled electrical conductivity, is set to escalate. This intersection of technological innovation and silver demand presents a compelling case for the metal's future price appreciation. Moreover, the analyst considers the impact of monetary expansion and fiscal policies on silver prices. In response to economic slowdowns, central banks around the world have resorted to printing money and quantitative easing, devaluing fiat currencies, and driving investors towards hard assets like silver and gold. This trend is exacerbated by burgeoning government debts, particularly in leading economies, heightening fears of inflation and currency devaluation, which traditionally bodes well for precious metals. Hunt also points to the Green Revolution as a significant driver of silver demand. The global push towards sustainability and renewable energy sources is not just a trend, but a shift in the fundamental way economies operate. Silver's critical role in photovoltaic cells for solar panels, electric vehicles, and other green technologies ensures its demand is not just sustained, but amplified in the coming years. In the realm of investment strategies, Hunt advises a keen eye on the silver-to-gold ratio, a historical indicator of when silver is undervalued relative to gold, suggesting potential for a more substantial upside in silver prices. Additionally, the analyst underscores the importance of diversification within precious metals portfolios, balancing holdings between gold and silver, and considering factors such as liquidity, storage, and the different market dynamics that affect each metal. As we approach the critical juncture where silver is posited to make significant gains, Hunt emphasizes the importance of staying informed on global economic indicators, technological advancements, and geopolitical events that directly or indirectly impact the silver market. For investors aiming to capitalize on the anticipated rise in silver prices, being well-versed in these multifaceted drivers is essential. This comprehensive approach allows investors to make informed decisions, timing their investments to optimize returns as the market dynamics unfold.
The demand-destroying event will go, in my opinion, will be on a short fuse for that, whatever form it takes. We can speculate, other people can speculate. My guess is not going to be any better than yours, is when the yield curve reversion goes back above zero on all the major yield curve reversions. So that's a totally different chart, and we've set tons of alerts. We're waiting for this. It's kind of like these are triggers. So gold and silver ratio trigger the break of the channel. You want to pivot most of your buying and stacking to silver then, and you might even rotate some of your gold, getting your high relative value of gold into silver ounces. And if you're a technical trader, which is what we do, you can join us and technically trade that with a small amount of conservative leverage with known stops. Here's these yield curve inversions. So answering the question on when the demand destroying event, That's the zero line. I'll just make it super fat so it pops for everybody there. That's the zero line. We have been in one of the longest of the modern era. So from Volcker to today, this is by far from, it has gone longer further in the 50s and 40s. But of the modern era, if we refer to 1980, and it's quite some time ago now to call it modern, you have never had such a scale of inversion as we're in now. And the bigger the dip, the bigger the resultant crisis. Don't forget the one before was pretty large by all measures. So this is technically suggesting that it is coming back up to the zero mark. That will be the trigger for hold on. Don't buy any more of anything. You're going to get a discount sale. And in that discount sale, maybe go for the silver this time. So that will also help potentially be a cross-reference. So you're checking, the lengthways and breadthways on this. We really want to get the site spot on here. A cross-reference for when, in fact, silver will become predominant, and it may require that event, that acknowledgement of the recession, whatever the case may be, maybe a hack. As I say, I won't spend your time speculating on that. But I don't know if that's interesting for you. And you
Expanding on the analysis, Francis Hunt shifts focus towards the investment and strategic implications for individuals and institutions eyeing the potential silver bull market. He stresses the criticality of timing and market entry points, highlighting that while the long-term trajectory for silver seems promising, the path will likely be punctuated with volatility and market corrections. Investors need to be prepared for these fluctuations, utilizing them as opportunities to accumulate more silver at lower prices, rather than being deterred by the inherent market dynamics. Hunt introduces the concept of smart leveraging within the context of silver investment. Given silver's volatility and potential for significant price movements, he discusses the strategic use of leveraged investment instruments, such as futures contracts and options, for experienced investors. However, he cautions that while leveraging can amplify gains, it also increases the risk of substantial losses. Therefore, he advises that such strategy should be employed judiciously, with a well-thought-out risk management plan in place. The importance of physical silver holdings versus paper silver investments is another area Hunt delves into. He advocates for a balanced approach, recognizing the benefits and drawbacks of each. Physical silver, such as coins and bars, offers tangible ownership and reduces counterparty risk, but comes with challenges related to storage, insurance, and liquidity. On the other hand, paper silver investments, including exchange-traded funds, ETFs, and mining stocks, provide ease of trading and exposure to silver prices without the logistical issues of physical metal. Yet they introduce risks associated with market fluctuations, management decisions, and broader economic factors impacting stock markets. Hunt also touches on the role of silver in diversifying investment portfolios. Given its historical performance during times of economic uncertainty, inflation, and currency devaluation, silver can serve as a hedge against financial market volatility and systemic risks. By allocating a portion of an investment portfolio to silver, investors can potentially reduce overall portfolio risk and enhance returns over the long term. Looking ahead, Hunt speculates on potential triggers that could catapult silver toward the $100 per ounce mark. These include a significant downturn in global economic conditions, leading to increased safe haven demand, a substantial breakthrough in silver-based technological applications, or a major supply disruption in key silver-producing regions. He underscores the importance of staying attuned to global economic indicators, technological advancements, and geopolitical developments that could impact the silver market. Francis Hunt's analysis in this fourth step provides investors with a comprehensive understanding of the strategic considerations involved in capitalizing on the anticipated silver bull market. By highlighting the importance of timing, the judicious use of leveraging, the balance between physical and paper silver investments, and the role of silver in portfolio diversification, Hunt equips investors with the knowledge to navigate the complexities of the silver market. As we edge closer to seeing silver prices potentially reach unprecedented levels, the insights offered by Hunt serve as a valuable guide for those looking to make informed decisions and maximize their investment returns in the dynamic world of precious metals.
Very good capture by the arch controllers, I would say, because there's virtually very few safe havens. As you point out, banks have been part of the problem. And just taking a small step back, currencies borrowed into existence and we have a debt crisis. And the intermediators of that debt to the economy are the banks themselves. So they are part of the biggest bubble because they've allowed debt to be created and money to be created, and they've created, a lending environment. We have relatively high rates compared to what we've had before in an environment that so many are hyper indebted. We're actually having much lower growth in that environment. Where does the money come to pay the interest if the growth is down? People are borrowing in higher rates and assets are super high priced. All of that is part of the problem. So I would say cash and cash equivalents outside of the bank system is what you want. That's why I was mentioning if I expect there's a chance certain brokers will survive, I say counterparty risk will be huge, but I would be a shorter and I'd use options potentially and other mechanisms on super fluffy equities potentially and even the indices on stocks. For that. That might create a small bid a moment on the debt market, but never to the same extent that it used to. So it will bring in some bid on debt and rates will be cut. And at that time, you'll get a bit of money flowing, but A, into dollars and B, into debt markets as per before, but never to the same extent. The trust in debt is lost, and that changed on March 2020. We've also on the show previously with you shown the sort of dichotomy relationship of the gold-silver ratio being extreme overvalued in favor of gold at 128, coinciding, which is negative for metals, and coinciding with hypervaluation of the bond market. So that was the turn of those trends, the bond trend and the precious silver is undervalued, grossly undervalued. And we say those trends haven't changed. And any new event similar will actually not see the same amount of bid going into the debt market, even if everybody is in absolute fear financially and thinks the government is the safest hands in the house, which I don't. So cash equivalents and shorts, I'm afraid, and then ready to buy silver. That will be a silver call. Gold will rebound as too. It may be first for a few days, but once everybody hears that quantitative easing or proliferation and all the usual cures will come, I would imagine that's a point that silver will overperform. And you may find that that will coincide with our channel on the gold-silver ratio also breaking down. So you have multiple tests for something, but they will cross-reference each other and they'll all occur simultaneously. So if you have alerts, you'll have beeps going off everywhere, as I tend to do, and that's telling me.
Diving deeper into the evolving narrative of the silver market, Francis Hunt evaluates the psychological aspects of investing in silver during a bull market. Understanding investor psychology plays a pivotal role in navigating the highs and lows that accompany the journey towards the $100 per ounce milestone. Hunt emphasizes the importance of resilience and long-term vision, cautioning against the emotional pitfalls of fear and greed that often lead investors astray. Hunt discusses the phenomenon of FOMO, fear of missing out, particularly relevant in a rapidly appreciating silver market. He advises investors to remain disciplined, resisting the urge to make impulsive decisions based on short-term price spikes. Instead, he advocates for a strategic approach, focusing on gradual accumulation and adherence to a predefined investment plan. This disciplined strategy can help investors capitalize on periodic market corrections to add to their silver holdings at more favorable prices. Moreover, Hunt explores the impact of confirmation bias in the investment decision-making process. He warns that during a bull market, investors might selectively seek out information that supports their bullish outlook, neglecting contrary signals that could indicate turning points or consolidation phases in the market. To counteract this bias, Hunt recommends a balanced consumption of market analyses and viewpoints, ensuring that investment decisions are grounded in a comprehensive understanding of market dynamics. The analyst also highlights the significance of community and shared wisdom among silver investors. Participating in forums, attending conferences, and engaging with thought leaders in the precious metals space can provide invaluable insights and support, helping investors navigate the complexities of the silver market. These communities serve as a platform for exchanging strategies, experiences, and forecasts, fostering a collaborative environment that can enhance individual investment outcomes. As part of the broader investment strategy, Hunt advises on the importance of portfolio diversification beyond silver. While bullish on silver's prospects, he acknowledges the unpredictability of markets and the need for a balanced investment portfolio. This includes exposure to other precious metals like gold, as well as assets in different sectors and asset classes, to mitigate risk and ensure a more stable return profile over time. Looking towards the future, Hunt speculates on the evolving narrative of silver as both an industrial and investment asset. He anticipates a growing recognition of silver's dual role, leading to increased demand from both sectors. This, coupled with the challenges of expanding supply, sets the stage for significant price appreciation. However, he underscores the need for investors to remain vigilant, monitoring developments in industrial applications, geopolitical factors, and monetary policies that could influence the silver market's trajectory. In summary, the fifth step of Francis Hunt's analysis delves into the psychological and strategic elements of investing in silver during a bull market. By addressing the emotional challenges, advocating for disciplined investment practices, and emphasizing the value of community and diversification, Hunt provides a roadmap for investors aiming to navigate the silver market's complexities successfully. As silver continues its ascent, these insights offer guidance for maintaining a balanced and informed approach,
stock at higher prices are
maximizing the
reluctant to
opportunities
sell
presented by
something
this dynamic
on a
and
temporary
promising
price
market.
that they don't feel represents the market. There will be, in some senses, there will be a slight reduction in demand, I think, because of weak hands generally. Most people don't foresee and don't have the living means to actually have regular income that throughout a shutdown. I mean, if you're a restaurateur during CV-19 and you were shut down and you weren't getting footfall and you had many weeks shut down and you still had to pay your landlord's rent, etc., you aren't thinking about buying silver. You're battling about to make your rent check at home. So you can also have that demand effect that you inadvertently referred to, but there will also definitely be the supply aspect. What you want to be is someone who is not adversely, unduly affected, and I think we all will be a little bit, but has plenty of powder on the sidelines so that you can be a buyer, because there may be forced sellers. So there could be stackers out there now that rely on a job. They've got a massive mortgage payment, a car payment, and everything payment. And even though they believe in silver and gold, they could lose their job. They could have a whole bunch of things. And the wife's going to say, do you want to eat or do you want to sit on your stack of silver? And they'll be forced sellers, what I refer to as forced, gritted teeth. And that's the big thing I worry for everyone out there right now. Do not be put in a situation that the only asset of value you have available if you lost all forms of income is your precious metals and you become a forced seller. Have the means somehow, and that might mean, bootstrapping other projects, etc., that you're not entirely reliant on employment in an environment that there'll be no new employment. You're not entirely reliable. You've got to have supply of stock. You've got to have almost a prepper, a financial and even beyond financial, a social and logistical prepper for all things you could need, and still have cash out of banks in the system. And not everyone's able to do that. I understand that. You sit there saying that. I'm kind of fortunate. You probably are too. But other people, if they lose their job, they're in deep.
Francis Hunt delves into the realm of risk management and its paramount importance in the journey towards capitalizing on silver's ascent towards $100 per ounce. Hunt underscores that while the potential for significant gains is compelling, the path is fraught with uncertainties and volatility that necessitate a robust risk management strategy. One key aspect Hunt emphasizes is the need for portfolio diversification as a fundamental risk management tool. While silver's potential is undeniable, he advises against overconcentration in any single asset. By spreading investments across various asset classes, including equities, bonds, real estate, and other commodities alongside silver, investors can reduce the impact of silver price volatility on their overall portfolio. This strategy ensures that even if silver experiences a temporary setback, the overall health of the investment portfolio remains stable. Hunt also discusses the significance of setting stop-loss orders for silver investments, particularly for those engaged in more speculative positions such as silver futures or leveraged ETFs. A stop-loss order is a predetermined price level at which an open position will be automatically closed to limit potential losses. This tool is crucial in preserving capital during unexpected market downturns, allowing investors to live to trade another day. Hunt highlights that the discipline to adhere to stop-loss levels is essential, as it prevents emotional decision-making in the heat of market movements. Moreover, Hunt explores the concept of position sizing within the context of risk management. He advises investors to carefully consider the size of their silver positions relative to their total investment portfolio. This involves assessing one's risk tolerance, investment horizon, and financial goals to determine the appropriate amount to allocate to silver. By sizing positions, an investor ensures that they are not overly exposed to adverse price movements in the silver market. Additionally, Hunt touches on the importance of continuous learning and adaptation. The silver market, like all financial markets, is dynamic and ever-changing. Investors who commit to ongoing education about market trends, economic indicators, and silver-specific developments can make more informed decisions and adjust their strategies in response to new information. This adaptive approach is key to navigating the complexities of the silver market successfully.
Yes. So gold has done phenomenally, in fact, and it's broken the 2K, which we said was a seminal level. And this is now steadily working its way up quite consistently to our doorstep of our 2,900. I think the 3K is the next bulking point, but that's not going to be overnight again. And we're going in staircases where we're making a level, we're consolidating, we're having a pullback. Just to show you on a smaller time frame, we had this structure. We spoke of this on one of our chats with you about we think there's a larger continuation pattern coming, and the target for that was up there. And that's why we were fortunate enough to get such a great exit on that wick. During that period, you were at a stalling point, our second interim for our targets, and that created a falling wedge. And we got back in on a tiny structure in here. That gave a great risk reward as well. So we got back in there. So I actually had existing entries and I put further entries in there. So we had a great trading spell on gold out at the same point. And you can see it sold off fairly firmly after that. So it's still not overwhelmingly like a runaway parabola. It still helps at a trading level to take something off the table every now and then. The dollar is still trying to do its best to maintain, to not allow the gold canary to tweet too loud in the mine. So we're sort of staircasing on the low quietly, and everyone's not referencing it, but it's slowly doing exactly what it needs to do. And if I go to those other currencies option, and I just show you a little bit of what we've been playing with on the lower time frames now with silver, that's gold, a euro. In fact, I think we prefer the gold pound. I'm just going to bring that option up for you. You can see that against the other major currencies, the euro being one, but also the pound, which is our favorites in this particular trade, we're seeing the fact that there's another setup on a lower time frame. It's about the 30 minutes. And again, it's generating targets and we expect upsides. And, we have a very simple tool that we generate our draws. So we do one thing, and it's volatility squeezes. So we were expecting gold to have a good spell, and it's exactly what it's doing. A follow-up after that initial rest after running.
The focus shifts towards the psychological resilience required for investors to navigate the tumultuous journey as silver approaches the anticipated $100 per ounce milestone. Hunt underscores the importance of mental fortitude, emphasizing that the psychological aspects of investing are often as critical as the financial strategies employed. Hunt explores the concept of emotional discipline, highlighting that the volatile nature of the silver market can elicit strong emotional responses from investors, including fear, greed, and overconfidence. These emotions, if not managed properly, can lead to impulsive decisions, such as panic selling during downturns or overly aggressive buying in euphoric market phases. To combat these tendencies, Hunt advises investors to develop a mindset of emotional discipline, focusing on long-term objectives rather than short-term market fluctuations. Building on the theme of psychological resilience, Hunt discusses the value of patience in the investment process. He points out that while the potential for silver to reach $100 per ounce is based on sound market analysis, the timing of such movements is inherently uncertain. Investors may need to weather periods of sideways market action or even temporary declines before the larger bullish trend resumes. Patience, therefore, becomes a vital trait, allowing investors to stick to their investment thesis despite short-term market noise. Moreover, Hunt delves into the importance of adaptability, acknowledging that market conditions can change rapidly and strategies that were effective in one phase of the market cycle may not be suitable in another. He encourages investors to remain flexible, willing to reassess their investment approach in light of new data or changing market dynamics. This adaptability extends to being open to adjusting one's silver holdings, whether by taking profits in strong market phases or increasing exposure during corrections, always guided by a well-considered investment plan. Hunt also addresses the significance of setting realistic expectations. While the prospect of silver reaching $100 per ounce is grounded in robust analysis, investors should avoid falling into the trap of unrealistic short-term expectations. Understanding that markets can move in unpredictable ways helps in managing one's emotional response to market movements. Hunt advises investors to focus on the broader trend and the
I
underlying
definitely do
fundamentals
think it will
driving
be the
silver's
trigger,
value,
and you're
rather than
absolutely
getting caught
right
up in daily
that
price
something that
volatility.
could be very crushing to demand is not supportive for the silver price at all. In fact, silver again will probably overfall to the downside. In fact, both will fall. We actually have the more recent history of the events of March 2020, where you had both gold and silver fall. However, gold shrugged that off a lot quicker and a lot better than, for example, Bitcoin and many other stock markets did. Because the cure is proliferation, and gold is an alternative, is the original, I would like to say, money system, and fiat is the alternative proliferation system that is being benchmarked against something that cannot be proliferated any much beyond the supply rate, which is between 1% and 2% a year. So they will both go down, and silver more. But the cure that they will bring, the reaction to that collapse in silver, and we traded $11 in CV19 on the pullback, is the opportunity to reweight, because during that spell, if I bring go back to the metals charts and we leave our yield curve inversion, and as I say, we have alerts on all forms of charts set up here for when this might come. And this, by the way, there's a technical pattern for this as well. Let me just mention as well, Elijah, it's kind of interesting. You have a small shoulder in there. You have what we call a W head. So that's kind of like a W bottom. And then you've got a bit of a right shoulder structure setting up here. And we think you might squeeze and then break. And that could be, if I'm looking at this, could be around April, May, June, but it could also be July. It could extend. So I can never answer people with a time for all these events. I'm not that clairvoyant. However, I can give you a set of circumstances when you're now on borrowed time for that event, and going back above zero that's when I get out of most money in banks. If I have one counterparty broker that I think will survive even the worst, I go into puts on equities, indices, and everything else, and I wait for things to blow up. Sad to say, but that's the only way you can serve yourself and your family, and you make the upside on that. So that's how I intend to play it, and these are the questions and the way I answer when silver and when the demand-destroying event. And I'm hoping that that's going to be something useful that other...
Francis Hunt turns the focus towards the tactical execution of silver investments, providing a granular look at the methodologies investors can employ to maximize their returns as silver edges closer to the $100 per ounce target. Central to this discussion is the concept of dynamic rebalancing, a strategy that involves periodic adjustments to one's investment portfolio based on changes in market conditions and asset performance. Hunt elaborates on the use of technical analysis as a key tool in identifying entry and exit points for silver investments. He points out that by studying price patterns, volume, and other market indicators, investors can make more informed decisions about when to increase their silver holdings or take profits. This approach requires a disciplined adherence to pre-established rules for buying and selling, which helps investors avoid emotional decision-making that can detract from investment performance. Moreover, Hunt discusses the strategic use of dollar-cost averaging, DCA, in building silver positions. This technique, which involves regularly investing a fixed amount of money into silver, helps mitigate the impact of volatility by spreading purchases over time. DCA allows investors to accumulate silver at various prices, reducing the risk of making a large investment at an inopportune time. Hunt suggests that combining DCA with tactical adjustments based on technical analysis can create a robust strategy for navigating the silver market's ups and downs. Diversification within the silver market itself is another theme Hunt explores. He advises investors to consider a range of silver-related investments, including physical silver, silver mining stocks, ETFs, and other derivatives. Each of these investment vehicles offers different risk-reward profiles and liquidity options, allowing investors to tailor their silver exposure according to their investment goals, risk tolerance, and market outlook. Hunt also touches on the importance of global economic awareness in silver investing. Factors such as currency fluctuations, international trade agreements, and economic policies in key silver-producing countries can have significant implications for silver prices. He encourages investors to stay informed about global economic developments and consider their potential impact on the silver market when making investment decisions. To further refine investment strategies, Hunt highlights the value of scenario planning. By considering various possible future states of the world and their implications for silver prices, investors can better prepare for a range of outcomes. This forward-looking approach enables more strategic decision-making and helps investors align their silver holdings with broader economic and market trends.
I continue to have general good news for the gold market, working its way up pretty steadily and consistently to the high side. So it remains a hold. Again, that question then comes, but when silver? And I will just remind everyone, we've covered this with you as well before. No one's going to give you a day and date, but we will give you a set of circumstances when it comes, and that is typically going to surround two questions. When silver, and could there be a major demand-destroying event between now and then? And how will you know when? And I would like to, preempting your question around silver and other groups of it, almost say to you, those two questions actually have a little bit of an overlap in them. That's why I've dragged the other one into it. The first question, when silver, is determined by the gold-silver ratio. And we've done draws and discussed this with you many times, that we're in a bit of a channel here, and that not until, so when we traded the gold up, we chose to trade gold, we didn't trade silver. Why? Because it was still showing relative weakness in its relationship with gold. So this is still stage one. You're doing the 100-meter sprint. You're not yet on the pole vaulting stage. You've got to just stay with gold at a trading and even at an investing level for now. You can see we're on the high side, 90 on the gold-silver ratio is up top here. It's grinding up. And we didn't look at silver. And when silver got up to its capping descending grind line, I'll show you that in a minute now, we felt it would not break and it would be rejected. We've cried wolf too many times to trust. And so we have, okay, when will we take this silver bull part really seriously again? And what we need is the gold-silver ratio to return to this level on the low side and look like it's going to give us some small time frame technical pattern to show that it'll break down. And as the gold was running, silver was actually up top here. So it's not going to happen. I'm not going to trade the silver. Normally it's the higher beta in a bull market. It's not ready to bull. We're still in stage one. 100-meter sprint. It's not pole vaulting season yet. That's why we traded the gold and we ignored the silver's rally. It will respond in kind to a degree, but not with any great conviction yet. So I'll show you that silver if you're happy with the direction I'm taking you here. Draw, and we just put the lines back on. Again, there's that red capping descending grind line. We have it like that. We just didn't trust it. It did have a move up impulsively. We're showing you here. But it just didn't have breakout momentum. And we've seen it be rejected there, and there. And we have one of the biggest continuation patterns building up over here. And until that gold-silver ratio breaks out of that channel, we're not going to go, okay, now you trade with, if you have a method, your silver, or you start swinging some of your gold ounces into silver ounces. That's
Francis Hunt encapsulates the essence of mastering the silver market's journey towards the $100 per ounce mark. This synthesis not only emphasizes strategic financial planning and psychological resilience, but also integrates the importance of staying informed and being proactive in community engagement within the silver investment sphere. Hunt emphasizes the necessity of continuous market education and staying abreast of global economic trends. He points out that the silver market does not operate in a vacuum. It is influenced by a myriad of factors including geopolitical events, technological advancements, and shifts in industrial demand. Investors who dedicate themselves to ongoing learning and stay updated with these developments can anticipate market shifts more accurately and make informed decisions. This involves not just passive consumption of information but active research and analysis to discern how broader trends could impact silver's trajectory. Moreover, Hunt highlights the power of community in the investment journey. Engaging with a network of like-minded investors and experts provides a platform for sharing insights, strategies, and perspectives on the silver market. This collective wisdom can be invaluable, offering support during uncertain times and broadening one's understanding of market dynamics. Hunt suggests leveraging online forums, investment clubs, and financial conferences as avenues to connect with the silver investment community. These interactions can also serve as a counterbalance to the emotional challenges of investing, providing reassurance and collective intelligence to navigate the market's ebbs and flows. Integrating these elements with the foundational principles laid out in the earlier steps, Hunt presents a holistic approach to investing in silver. This approach combines sound financial strategies, such as diversification, tactical rebalancing, and risk management, with the development of psychological resilience traits including emotional discipline, patience, and adaptability. Additionally, setting realistic expectations and being prepared to adjust one's investment stance in response to evolving market conditions are underscored as key to long-term success. In concluding this comprehensive analysis, Francis Hunt reiterates that the journey towards silver reaching $100 per ounce is both promising and fraught with challenges. Success in this endeavor requires more than just financial acumen. It demands a well-rounded approach that encompasses psychological preparedness, continuous learning, and active community engagement. By adopting this multifaceted strategy, investors can navigate the complexities of the silver market with greater confidence and agility, positioning themselves to capitalize on the significant opportunities that lie ahead as silver advances towards this monumental price target. In essence, the path to achieving remarkable gains in the silver market is a marathon, not a sprint. It calls for a balanced and informed approach, blending meticulous financial planning with the cultivation of mental fortitude and an engaged, proactive stance towards learning and community participation. Through this comprehensive methodology, investors can not only aspire to but also achieve success in the dynamic and evolving world of silver investing.